Good morning, good afternoon, good evening. Live from New York, it's the China debate, discussion of the renminbi in 5 questions. Today we're going to talk about whether the renminbi has devalued enough. What drives the renminbi? Is it just about their trade balance in China? What should you focus on more, the yen, the euro, the Korean won, or the ruble? What the CNH is and whether it matters. And what really drives the Chinese renminbi. So, without further ado, let's take the first question. Has the renminbi devalued enough? Or, perhaps put another way, are we just looking at the wrong currency? One of the things that strikes me about the Chinese relationship with the United States has been that it has been systematically trying to depeg from the dollar relationship for over a decade. And it seems to be getting more and more successful. Just looking at this chart, there's a couple of observations that strike me. One is that since 2014, the size and change of the movement in the renminbi, if you look at this, has been dramatically more volatile. So if you look back in the 2008-2010 period, the same period of time, essentially, there was almost no variation whatsoever, which would suggest that you were absolutely pegged to the dollar, which makes sense. During the period of crisis, China reached out and made sure that their currency was as good as the dollar, if not better. It then managed, because of QE and because of its current account surplus, and perhaps because of its growth prospects and interest rate differential, the renminbi saw a steep and steady appreciation. In fact, that appreciation still stands as far more notable than the depreciation of which we've seen since the end of 2014. And while people would say that the renminbi has devalued around 10% against the dollar, answering the question whether it's devalued enough is far more difficult, in part because we're no longer in the same regime. Volatility in the dollar relationship is notable, and there's something else going on. Perhaps, as I said in the first question, we're looking at the wrong currency. The dollar uptrend also has some notable characteristics, which would make me think, if we go back to the 2008-2010 period, that line is somewhere around 6.8, 6.82 against the dollar. We're nowhere near there. Every time we get to 670 in the renminbi, the authorities in China seem to do some intervention. So we're still about 2 to 3% away from that stability zone, which is where I would pay a lot of attention. So what really is the basket of the renminbi that is new, that started at the end of 2014 against the dollar, and why does it matter? The authorities created a renminbi index, in part to get ready for its inclusion in the IMF SDR, and in part to really make a reality of the separation from the dollar peg. There are 13 currencies in the renminbi basket, and it makes clear that the relationships to the dollar and the euro are still very, very important, perhaps overweighted. But if you look at this, just as I was saying that 670 looked really important to the dollar, the same thing shows up in the renminbi basket, implying that we're probably close to a zone where the move up in the dollar that we've seen against the euro, the yen, and the sterling in the last week is going to really put the authorities on the spot next week. And that's something that I'm going to pay a lot of attention to, not just about the renminbi against the dollar and it's likely going through 670, but how the basket trades, the renminbi against the basket, which has large weightings against the euro, the yen, and a lot of Asian currencies. So this currency basket has already devalued 12% over the last year and a bit. That has shown up in a number of ways in China. First, it's shown up in that the sustainability of the trade surplus in China continues to astound and outperform most economists' expectations. So the devaluation has clearly helped exporters in China, which in some ways has helped the growth problem that they've had in the slowdown over the last 3 years. Part one. Part two, the devaluation has really reflected a focus, a shift from dollar and Europe to Asia. And the relationship that seems to be the most important to China in terms of its currency is perhaps the yen, which makes the move from 100 to 104 in dollar yen this week that much more interesting and important for next week.